Your goal is to survive another day. There are opportunities that come to businesses simply because they've survived the longest.
Welcome to the show. Cannon and Claudia with you. If you love the business of coffee, or if you are building a mission-driven business, this episode is for you. Claudia, can you introduce our guest?
Yeah, today we have David Paparelli on the podcast, who's co-founder and CEO of M-Cultivo, which is a specialty coffee platform helping producers professionalize, capitalize, and commercialize their businesses. He interviewed 100+ industry leaders and built a market-led model, modern operations tech, supply chain financing, and global auctions that lift producer brands and prices. He also hosts the Cupping Table podcast, which you can check out in the show notes.
So two things in this episode. One, it's so interesting to hear how somebody is building a business that innovates how coffee is delivered. In particular, how he is empowering the producers of coffee who have basically had no power in the supply chain. So it's inspiring, but it's also just really interesting to hear how that business model is emerging and having impact. Secondly, this conversation with David offers a playbook to entrepreneurs who are actually building a mission-driven business that balances purpose and profit. And it's so hard to achieve both. And David is doing that in a unique way. And this playbook will literally take you into the wheelhouse in the engine room about how he's making decisions where he puts his personal capital to work and then ultimately starts funding a business with a broader balance sheet and how he's using capital markets. But it resonates so well with our 3Rs playbook, where we help business owners build their wealth through their business. And you'll hear him talk about purpose and process. You'll hear him talk about how he is building his balance sheet. And you'll hear him talk about what financial freedom means. For many business owners, it is ultimately about the exit. Well, in this case, it's not so much about the exit. It's more financial freedom through the spirit of stewardship that defines how much is enough for David and his family, but also to fuel this business model. And it's a really interesting balance. So sit back and enjoy this episode with David Paparelli. David, great to have you on the program. Thanks for joining us. Excited to talk about the business you've built and where you're taking it. For starters, I thought we'd just start off way back to the beginning. Did you always see yourself as an entrepreneur?
Yeah, no, thank you so much for having me. It means a lot to be asked to be on one of these programs from humble beginnings, and then you relish the opportunities to be able to share your story like this. So thank you so much for having me.
Absolutely.
Yeah, I think I did always have kind of an inkling to start a business, or some urge to that. I think there is something that you're kind of born with as a self-starter. In high school, I started a couple businesses, and then I had, instead of having a traditional, summer job in college, I had a business as well there. And the one kind of internship I had in college, I didn't like very much. It was in wealth management, and I think that was probably an indication that I needed to go do something different or become more of an entrepreneur. Yeah. But I knew I wanted to go get experience, so I went out in the world and got a little experience under some other great entrepreneurs before deciding to start my own thing. But I always like startups. I always like starting things. I always like having that kind of inclination.
Was there ever a special mentor or a hero for you in the business world that kind of inspired you?
A lot, yeah. So I would have to mention that, I don't like to bring it up initially, but my dad was an angel investor. And so he's been a great mentor of mine. I've been very lucky to have loving parents along the way. And so I need to mention my dad and my mom in that.
Sure.
I would also say that there's a mentor of mine named Mike Morris, who's been a consultant his whole career, but he has a bit of that edge to him, self-starter, thinks outside of the box. And he's been a great mentor. And then, going back to my first job in the coffee business was at a company called Thrive Farmers. And there's a great entrepreneur, head of that company, called Michael Jones. And just being able to see them operate, allowing us to fail where we were allowed to fail, and succeed where we were allowed to succeed. Learned a lot from that whole process of starting that company.
Yeah. Well, so that journey took you to starting M-Cultivo. What inspired you to start that? What What was the opportunity you saw, and why did you build initially?
Yeah, I'd been in coffee for 7, 8 years at that point. I've been in some combination of economic development and agriculture and coffee for about a decade. And I knew I wanted to do something a little bit different in the specialty coffee sector. Specifically, I wanted to stay in the sector. I learned a lot. I loved the environment. I loved the industry. I loved the people we were working with. And I loved the market. And I knew that it didn't need another exporter. It didn't need another importer. It didn't need another roaster. Didn't need another coffee shop. I didn't feel. And so I wanted to take a different viewpoint. I took the opportunity to go to London and get an executive master's there just to sort of get outside of the box a little bit. I need some time to think and evaluate what opportunities might be in the marketplace and lean on a few good people that might be able to assist me on this journey of kind of starting a new business. And the opportunities that we saw didn't come from just kind of falling in our lap or from experience. We actually had the pandemic happen during that executive master's program. And as a result of that, had a lot of spare time on our hands as what was becoming a fledgling young company, and with a problem, looking for a solution sort of thing. And we had about 100 conversations with people in the industry. Just ask them questions like you're asking me today. What challenges do you face in? How'd you start your company? What is your outlook on the specialty coffee space? What is the greatest need here? And through those conversations, it came down into a few key characteristics where we felt we could start a company and have great impact. One was we knew coffee producers, which are the guys that aggregate and export coffee, farm, aggregate, and export coffee around the world. So we're talking about mainly Central America, South America, and Africa. They needed to be our clients. If we were serving them well as clients, we knew that we were having impact. So if they would in fact pay for a service from us, then they probably value us and we would be having impact that was aligned, I would say. The other key attribute, core tenet of when we were starting was they need to be in a better position to negotiate prices for themselves. And in order to do that, they really needed to build professional businesses and international brands. And we needed to offer services, technology that resulted in that ultimately as better market connections and better businesses for those folks. And by way of that, they would be able to funnel money down to their communities and support the communities that they exist in, essentially through job creation and supporting agriculture in those areas. And so that's really what we set out to do. And it was a vague kind of initiative, but we knew technology was going to be the focus. And then these other tenets would come into play.
So did it, we often talk about building, flying the plane while you build it. You'd already started the company. Did it take a while to get that ultimately which problem you're going to solve, or was it pretty clear and then you started the company?
No, again, these are kind of broad strokes of what I just talked through. That is not a clear product or service, so to speak. And so it took us some time. Our first product we launched was essentially trying to tackle this problem of professionalization. All these coffee producers around the world were on pen and paper and Excel, and we wanted to move them on basically an operating system that they could run their business on. And so we built that out relatively quickly. We were lucky early on to have basically a fractional CTO that could spin something up pretty quickly to get producers functioning on that. And that helped us generate cash flow relatively quickly as well, which was important and helpful as cash is oxygen for business, right? And so we bootstrapped, and through that engagement with clients, we started learning even more about what the real problems were. What were the core challenges that we're facing? And I would say it is very much a build the plane while you fly it scenario. But if you're not out there in the market with some sort of product or some sort of service, some sort of solution that you're trying to work on and engaged on, you're never going to get to the real problem or solution. I think a lot of folks, and we'd fall into this track multiple times. It's kind of you overthink the solution or over engineer the solution before you actually go out in the market and test anything. It took us, I mean, we are still trying to figure out and refine what the real problem and the real challenge in the marketplace is. That's a never ending task for us, and we'll continue to do so.
Yeah, continuous learning then and continuous relevance. You want to always
Absolutely.
be
Yeah.
able to reinvent. Well, so at this point, you are what, 5 or 6 years into it, and you've got a proven model that works. I'm just curious, looking back on it, what were some of the hardest things to really get it off the ground?
I think building technology is very difficult, especially if you're bootstrapping a company. I mean, a lot of that is dependent on your ability to build a team. There's a lot of competition for good technology folks in the market. I mean, the best folks will have job opportunities at Google, at Amazon, at Apple, at these large companies. And especially when we started the company 5 years ago, those markets were pretty hot. I mean, and they continued to be. So good salaries there. So building a team, always a challenge, getting people motivated in early days, not necessarily with a salary, but future opportunity potentially in the company. And then building things, taking ideas and building something real and launching it. You can't really fake that. Things are going to go out in the market, and then you're going to get feedback, positive and negative, on it. You have to be able to take that and iterate. So I think all that was challenging. I think it's a constant challenge as well to stay close to the customer. Over the 5 years, the other thing that can tend to happen is you build a team out. You got a great team. And then as a founder or CEO, you get disconnected from the market. So you're no longer having those conversations with customers. And then when you do have those conversations in one-off circumstances, you learn all this information and you don't even know the company that you've built anymore. You can't even recognize it. Yeah. And so I think those would be the key things. Would be, if I was going to give anybody advice on this, which I probably shouldn't, but it would be building a great team and staying as close to the market as possible, and continuing to ask these, continuous learning type questions. I call them stupid questions, just to get really insightful answers. And that's what we've done over the last 5 years, or tried to.
Are you a technology guy at all? And if not, because I don't think you have the technology background, how is, technology is such a key part to getting started. How did you manage that?
Yeah, we were we were a different story. I had no background in technology. I mean, I've been familiar with it. I took a few, coding classes in college, and, I wasn't afraid of technology and how it worked. Always been interested in it, but that doesn't make me a qualified CTO by any means, right? Very far, far, far from that. And the companies that I've been involved in the past weren't necessarily technology companies, right? And so this was a unique opportunity in the time. So the wisdom at the time was find a co-founder that is a technology person, right? Mm-hmm. Our co-founder is a lovely lady named Melanie Robb, and she had a chemical engineering background, and I was a business background. I was a finance background. And so with all of that, we ran into a situation where we needed to find good technology people. We were very fortunate that the world had changed a little bit to where technology, and now it's even more so this way with AI, technology was something that could be hired out with the right people and built in a way that you didn't need to actually kind of spend your late nights coding every single thing that was going to go out. You didn't have to do everything from scratch anymore. And so we just had to understand kind of the basic frameworks around technology, how it built. We were very fortunate to get good technology people around us that would help us with that. But I didn't need a CTO to do that. Our superpower actually became that we were coffee people. We were coffee people focused on coffee problems, and technology was a secondary aspect of that. So we could think around technology and how it would serve the market, not create basically a golden calf where the technology is the thing and we should worship that thing, and the market is stupid for not wanting it, because that's a horrible way to go. We never had that issue.
Hey there, it's Claudia, producer of Business Owner Tales from the Trenches. Just a quick break to say, if today's conversation is striking a chord, don't forget to visit cannon-carr.com. You'll find key takeaways from this episode, deeper resources, and you can download Cannon's 3Rs framework, a powerful tool for navigating the toughest moments in business. Again, that's cannon-carr.com. Now back to the conversation.
clearly you have a passion for the business and the and the sector and the people involved. Was there ever a moment of doubt where you were in those first 5 years where you're like, we can't get through this?
Yeah, I know. We had key employees leave. We
Yep.
had people that we thought would be co-founders or partners. We had them step out. In those early days, when things like that happen, you don't have a runway, and you really need to you need to get things done. The other thing we've had is we have an auction platform, and that's an aspect of our business, is what we built out as an access to market solution for producers, and that's been wildly successful. But we've had hiccups in the auctions, right?
Yeah.
And when those things happen in those early days, you don't know if you have reputational damage that's going to be lasting, and that's going to be a problem. Thankfully, we were able to power through. We took care of our customers well, and things were successful. But these very public product failures and these very key employees leaving is massive. And then the other aspect is cash is oxygen, like I've been saying, and with cash being oxygen, you need key investors at certain times as a possibility, and we've been going through that over the last year, effectively, of how do we scale this thing? How do we get enough cash in the door to scale this thing? Yeah. I will say this: I thought that these problems would start to go away, but they only accelerate. That's always a theme. Yeah, 5 years into the business, you're always 6 to 12 months from going out of business. Our finance guy tells me this all the time. He's like, "Well, we only have 12 months of runway left." I'm like, "Man, that's better than it's ever been. This is great."
Right. This is good news, right? Don't worry.
We should be celebrating that. That's not something to rag on our team about. We used to only have 1 day of runway left. Now we have 12 months. This is a gift.
That's progress. Well,
that is.
Well, congrats on getting this far, and I do want to get to the scaling side and the balance sheet. But just one last question on those first 5 years. How did you fund it? I know you had some angel investing. I know you put a lot of your own personal capital into it. So 2 questions. How did you fund it, and how did you get comfortable taking that risk, putting your own capital into it? What was the mindset, the thought process?
Yeah, it's a great question. Our theory in the very early days, and this still continues to be the case, is the best way, the best people to raise money from are your customers.
Mm-hmm.
And so we funded the very early days of the business, the growth necessary, not necessarily the salaries in those early days, because that's a hard thing to overcome. That's basically getting to cash flow positive once you can cover your team salaries.
Mm-hmm.
But funding the growth, paying for any cost of goods sold or cost of sales out of customers, just building a model around raising money from customers. And the idea is that if we can go sell this thing and a customer will buy it, then that should be enough for us, and we should dictate our decisions around that. The other thing is just not get over our skis. So how do we be very disciplined around the cost equation of our business and try and do things, and people would call that bootstrapping, right? Just trying to do as much as you can with as little as possible. And that used to be the entrepreneurial journey. Now people, the first step to being an entrepreneur might be to go join Y Combinator. And that just wasn't how we were going to do things, right? We were going to have the market vote, not investors vote on our success, right? And so a lot of that money came from customers. We didn't take any angels on. So we held, we still own all the business internally, all the equity.
Mm-hmm.
And so that created its own challenges. But as we wanted to scale the business and got into supply chain financing for coffee producers, which became an aspect of what we do, we had to get promissory notes and raise debt. But it was all focused on the supply chain financing mechanism of, if we put $1 in, we can get 25 cents out. And we know that based on this model that we kind of been able to build in that aspect of the business, so that subset of the business. So we raised promissory notes into that specifically.
Mm-hmm.
But that's kind of the full breadth of the funding that we had, or the cash in door that we had. In terms of how we got comfortable around that, I think it's difficult. It's sort of, you continue to kind of double down, and there's a little bit of the sunk cost fallacy there of, well, I put a year into my life into this, or 2 years or 5 years, I can't let it fail at this point. So what am I going to do? I think what me and my wife did that set us up well is we said, we're going to, in some point in the future, we want to start our own business, or we want to be part of a startup again. And so we're going to aggressively save up to that point. And so we'll have some buffer, and we're going to be very happy to put, name the number, 50, 75% of our net worth into doing this, knowing that even if we fail, we'll likely be in a better position and more hireable after this
Yeah.
to go do something else. And it's just risk
the career
tolerance.
side. Yeah.
And we put more into this thing than we thought we would, for sure. But the reason is because you start to see progress, you start to see opportunity, and so you're willing to say, okay, well, I think I could 10x my own money. Where am I going to put money in where I could 10x it in the next year? The only place I have, and the only faith I have in that is my own business. I'm not going to be able to do that in the S&P 500. So that's sort of the psychology of it. It's not healthy, but that was the psychology.
Yeah, well, no, it's what it takes, right, to get it off the ground. I love that bootstrapping mentality and success driving further investment. So now let's talk about the plans to scale, because now you've proven the model. You're in some sense still figuring it out, but you've got something that certainly works. So, what does scale mean? How do you build the team to deliver scale? And what's your own role in that? How does your role change?
Yeah, so we have our model has become an opportunity to partner with coffee producers in three areas. So we say we professionalize, we capitalize, and we commercialize specialty coffee production. So we bring in our technology infrastructure to professionalize the operation for that coffee producer exporter. We capitalize, so we bring in financing, so they no longer have cash flow concerns during harvest season, and they're able to weather those and grow their business. And we commercialize their coffee production. So that's our auction and global marketplace that we built out to be able to connect them with new buyers and better buyers, right? And so as we think about scaling the business, we have to think about those three service items for coffee producers. One of those is fairly easy, just build out the technology infrastructure so it's the best in class, and continue to do that. The other is raise capital into this Cultivo capital element to be able to finance more and more producers. So we're actively raising capital into that from investors that want above market returns and to have impact. And then the third and the commercialized element, we just have to, it goes back to the technology and the connection of that. We have to become more of I would say an auction house instead of an auction host. So this idea that we're going to market, promote, and we're going to drive these coffee sales to coffee buyers in a way that hasn't been done before for coffee producers. So really help them build international brands. That is enormously complicated because those could very easily be three different businesses, right? And we operate in a niche. So I would say as we focus on scale, our focus is on growing within the niche of specialty coffee, not growing and being all things to all people. So if we were going to do all three of those business lines on just the full breadth of the commodity business even. So we're going to do it in chocolate, and we're going to do it in tea, we're going to do it in coffee, and that would be probably stretching us too thin. The fact that we're focused in the niche of specialty coffee allows us to be a little bit broader in the services that we provide in specialty coffee. It comes down to, for us, the team that we build around that. So we're at the point after 5 years where we really are aggressively building out a leadership team that's strong and can grow the business to the next level, building out more breadth in their organization. We've doubled the number of employees every single year for the past 5 years, which doesn't sound like a lot when you start at 2, but we've gotten to 15 to 20 employees, I think is where we'll sit at the end of this year. And then the leadership team that comes behind that into 2026. So we need that. We need a strong leadership team behind that. And then we need as much capital as possible to be able to do supply chain financing. So that's our next goal, is to get to a $10 million fund approach in supply chain financing, and then just have the right team in place to be able to manage that and steward that money correctly.
Yeah. So how do you think about equity and debt then in your balance sheet at this point in terms of funding? So you've bootstrapped all along. At this point, do you continue to do you do any pre-funding to get to scale, or do you still continue to have kind of profit first and go along the way that way?
Any models that we put together, we focus on driving towards a cash flow positive organization. And that's always right in that line. because anytime you get to cash flow positive or near cash flow positive, you realize that you have a great opportunity and you want to put more money in the business, which then drives up your costs, which then moves you out of cash flow positive, and then you fight back to that point and that sort of thing, right? But our goal is to really be sustainably cash flow positive. So that's number one from a balance sheet perspective. We want to throw as much positive US dollars into that retained earnings category that we can over the coming years and be profitable. Since we didn't raise equity, we are in a negative retained earnings position, which is unique, right? For organizations that have been around for 5 years, and when banks look at us, they don't really know how to necessarily assess that, right? So there is some right sizing that would need to occur. The easiest way to do that is to raise equity on the side of the balance sheet, but you're giving up ownership in a 5-year stake, and so then you get into valuation and things like that. What we have done instead is we have created a balance sheet that is practical for our business, but doesn't necessarily take into consideration what a banker would think about our business. As we grow, we need to care more and more what bankers think, because we need credit facilities to grow, and we're just at that point, right? And so I would say historically, I don't really care if I have a 5-year promissory note at a fixed interest rate. I would rather have that than a 35% owner from an angel investor, right? It's just, I have more control over the business. As long as I believe in the business model and that I can pay back that prom note, I'm happy to do that kind of deal. And that's what we've done over the past is we run the company on debt. There is risk to that, but you need an economic engine that can pay back those prom notes and that interest. As we grow, that will change. There will be a combination of equity and debt that goes into the business. That's going to be pref shares. That's going to be common in the equity segment. And then the debt will be in a credit facility from a bank once we right-size the balance sheet and we can show cash flow projections that can service that debt. So that's how our balance sheet will be structured going forward.
That's great. Well, thank you for walking us through that. It's just a great example. So to be able to have banks and broader funding resources, right-size the balance sheet means getting retained earnings basically into the positive territory.
Yeah.
Which right. You're is that a year away, 2 years away, or hard to estimate?
Months. Yeah.
Months.
Yeah. The next 30 to 60 days away.
Yeah. All right. Well, there you go.
I mean, the right size of the balance sheet is a simple equation from a banking perspective.
Yeah.
It's just raise enough money to throw cash into the equity category.
Yeah.
And then, if you're talking to a bank, they're going to look at cash flow projections for sure. But they're also just going to look at how much collateral do they have. And so they'll say, well, for us, we'd be looking at a $10 to $20 million credit facility. They'd want, $2 to $3 million sitting in a cash account it's their first loss guarantee. And then they want cash flow projections that justify the debt on the organization. So all of that is just an equity buffer. That's that equation. And it's very basic math, unfortunately. I mean, they don't necessarily care about, the innovation that we've done over the last 5 years. They just care what the balance sheet looks like. And so we have to care about that too.
Sure. Well, you've done your homework, which is great. Well, let's final segment. Let's just pivot to ultimately what I call the end game. A little bit what success looks like. But how do you ultimately monetize the business, right? Do you and this one since it's kind of purpose driven in some sense, it may be not your typical exit. How do you think, what does success look like, and how do you ultimately monetize the business in that regard in your role?
Yeah, we've been thinking a lot about this recently. As I said before, first step of monetization is just run a profitable business. I mean, if you can have a business that generates, profit distributions year over year, or you have the opportunity at least for that, then that's great news, right? I mean, anything in that ordinary income category is sort of short term, and that's good news. Now, equity appreciation. That's another larger question for me, maybe personally, and what am I going to do? What is my family going to do if we exit the business? I don't have any intention of exiting at this point, and I'd be looking at a 7 to 10 year time horizon, which is far enough out where it's very, it's gray at best. I don't have an answer to that. I did like what. I don't like everything that Mark Zuckerberg says, but I did like what he said when he got an offer from Yahoo. I think he was offered $1 billion for Facebook kind of back in the day. Mm-hmm. And he went to his board and he said, this is going to be a short conversation. We're turning down this offer because if I were to take this offer, I'd go build another social media platform, and I kind of like the one I have. I mean, I like specialty coffee,
Yeah.
and I like the specialty coffee business and the industry. I like the people that I work with, and so I'll do this as long as the industry will have me, frankly, and as long as my health can continue. And so that's not to say that we are looking at raising money, which then forces questions of worst case scenario. What if I can't operate in this business? Or what if this business outgrows me? What do we do then? What is my financial reward at that point? And I think you do need to have some level of equity appreciation built in of thoughts of, well, we might sell the business to this other entity. Our team internally has essentially said, as soon as we sell the business, our impact will not continue. And the impact that we've had in the past might be completely destroyed. And we have to be ready for that. And there has to be a financial reward as a return for that. And we have to be conscious we're making that decision. So we're very reluctant to sell, in other words, because we are in this business for impact, not for profit primarily. It's a means to have the impact.
Well, so as a purpose-driven business, how do you think about your own financial freedom then ultimately?
It's difficult because profitability and purpose are not always aligned. And we are fortunate to be in a business where our clients are the economic bedrock of communities in Central America, South America, and East Africa. And so we are economically aligned, but even so, there is a cost to that. We know that if I took my team and I put it in any other industry, I'm sure we would make more money. I'm certain of it. And so financial freedom for me is going to be contingent on creating a model that can function on its own and be profitable on its own. If I can get to cash flow positive and I can control that cash flow and I can, be a good steward of that, then we'll get to financial freedom. And then it's just personal decisions on what is enough for me and my family. Personally, do I need a bigger house? Do we need to move to a better neighborhood? What do we actually need? And can we be a little bit more disciplined around those decisions? Because my burn rate is going to impact the company's burn rate, which is going to impact, our ability to be profitable and cash flow positive. And I just need a leadership team that's conscious of that as well, and on board with that. Certainly my co-founder needs to be on board with that, and she is.
That's great. Well, you do your homework clearly, and you plan in advance. So, right, no, I don't anticipate these things taking you by surprise. And it's amazing what you have built, and it's very cool the purpose-driven model about how it is building a community and making a community of farmers better, which is changing the world in its own regard. So I just love that. Well, the final thought then, for others who are 1 year into a service-based business where, it's business profit, but it's also purpose. What advice, just what you've learned so far, what advice would you give to that budding entrepreneur?
Yeah, probably when I talk to entrepreneurs, it's probably, maybe two or threefold. I think one is very simple. Your goal is to survive another day. I mean, there are opportunities that come to businesses simply because they've survived the longest. and that's not the most aggressive and scale up and, we're going to become unicorns and triple it. But some of it is very simple. The best opportunities that we've had over the years, is because we are building a robust economic model, and there's customers and there's lead lists and there's a pipeline and all those things are happening. But a lot of them just reached out on our website, just cold stuff we hadn't even thought about. People just wanted to talk to us and see what we were doing, and they had an idea. And that was simply because we survived another day. So I would focus on, anything that you can do to survive another day. I think the other piece of this is cash is oxygen, and get to cash flow positive is as quickly as possible and manage that. That's going to give you a whole heck of a lot of freedom, and that's going to attract investors, the kind of investors that you want, not the kind of investors that are going to own you. And then if you're looking for impact, it is very difficult, but there's a lot of conversation around impact investing and social entrepreneurs and this sort of thing. And there's a lot of stories being told by entrepreneurs that they're social entrepreneurs. There's some impact oriented portion of their business. I would say you have to do that with some level of authenticity and integrity. And I wouldn't chase it. I would chase building a solid business and then align that solid business with impact instead of chasing impact and then trying to build a solid business that services that impact, if that makes any sense.
It makes total sense. And
that's the advice I would give.
I think that is great home run advice, right? We all want to make a difference, but you've got to have a business behind it to be able to have that impact. So no, I think that's wonderful. So, and you were talking about the importance of getting to cash flow positive and having that mindset, which to me means saying no to some projects, right? Or to some things and having that discipline. And I think you would agree with that.
I do agree with that. There are some projects that come out that are going to say, okay, well, this builds into a bigger model. The way that, when we thought about building new technology, we would always try and go sell that new technology and have someone pay the costs of that, a customer pay the costs of building that new technology. And then we would take that, own that intellectual property and grow it from there. So you might say yes to a project that is break even, that makes no sense to a CFO, simply because you know that you're going to own the intellectual property at the end of the day, that then you can go resell to other customers and make that into a profitable venture. It goes back to that idea of the best people to raise money from are customers. And so that's the only caveat I would add to what you just said. But there is a power to know. You need to use that, and it's hard to use that in the early days versus 5-10 years in. Yeah.
Well, David, if people want to learn more about M-Cultivo or you and your own journey, how's the best way for them to do that?
I'd say mcultivo.com. You can look on our website. We're on LinkedIn and Instagram, and unfortunately, all the social channels, which I think we all need to spend less time on, but we are. I do have my own podcast called The Cupping Table. So cool. I interview the best coffee producers and the best coffee buyers all around the world, so they can check that out as well. But the fortunate thing is Paparelli is a relatively unique name, and so if you just look up my last name, David Paparelli, you'll find me.
We'll find you. Yeah. Yeah. Well, David, this has been an awesome episode. Your journey in blending profit and purpose is unique in the grand scheme of things, although, certainly will resonate with a lot of folks in the social entrepreneurship space. So well done. Keep on keeping on. I look forward to having you back on the show in about 3 years and hearing the next generation of what's going on. So
I'll be ready for it. That'll
awesome.
be great.
In fact, maybe we can do it next year. So, but anyway, David, thanks for joining us. Great show.
Yeah. Thank you for having me.